to use your car for work, many Australians miss out on thousands of dollars in work car tax deductions each year. In this video, I'm going to show you, yes you, exactly how to claim and maximize your work-related car tax deductions, plus where to record them on your personal and business tax return. Hi, I'm Veronica. I'm a board-certified tax agent and an accountant. So before we dive in, let's understand what work-related car expense is. According to the Australian Treasury, who provides advice on tax law, the work-related car expense was introduced in the 80s so that the ATO allows taxpayers a deduction for the costs associated with operating motor vehicle during the course of deriving assessable income or in carrying on a business. And to qualify for this deduction, you must meet the following 5 basic ATO rules. Don't worry, I know 5 rules seems to be a lot of rules, but I will simplify it and break it down for you. Rule number 1 is that the motor vehicle that you're using has to meet the ATO's definition of a car. So the ATO defines a car as a motor vehicle that carries a load of less than 1 ton and fewer than 9 passengers, including the driver. So if your vehicle does not meet this definition, you can work out your vehicle expenses using the approach for a vehicle that isn't a car, and the link is in the description box below. Rule number 2 is that you have to own, lease, or hire it under hire purchase arrangement. Alternatively, if you use a car owned by a family member, you just need to show that you were made the owner or the lessee, then you can claim as though it's your car. Now, if you don't lease it, you don't own it, it's not under hire purchase arrangement, you don't have a private arrangement with a family member, you can claim using an approach for a vehicle that isn't yours. This link is also in the description box below. Rule number 3, your car expenses must be for work-related trips. So this rule tells you who can and cannot claim depending on the traveling nature of your job. To make it easier, I have split this rule in 4 categories for different type of taxpayers, so you know exactly what you can claim. Category 1 are for taxpayers with a regular place of work. Category 2 are for tradies and others who carry bulky tools and equipment. Category 3 are for those whose home is the base of employment. And Category 4 are for taxpayers who do itinerant work, like shifting places of work from one location to another throughout the day. An example of it would be Uber drivers, plumbers and tradesmen who travel from one home to another to repair things. Now, I know tax can be boring, but we all want a refund or pay very little tax, right? So to save time, just skip to the category chapter that applies to you. Category 1 are for taxpayers with a regular place of work. We are required to travel to at least 2 job sites continuously throughout a working day during work hours. So an example would be you have to travel from your regular place of work. I'm just going to use that as job location A, okay? So you have to travel from job location A to see a client, or from job location A to go to a seminar or meeting that are outside of job location A, or you could travel from job location A to drop off or pick up items at the post office, at office works, or even going from one job to another job, but that second job cannot be home. Category 2, if you're a tradie or a taxpayer that carry bulky tools and equipment, you can claim a deduction from home to work and vice versa if you meet all of the following criteria. 1, tools and equipment are essential to performing your job duties. Tools and equipment are bulky, meaning they are awkward to transport because of their size and weight, and they can only be transported conveniently by a car. Plus, there is no secure storage to store these tools and equipment at your workplace, and you don't carry it merely by choice. Category 3 are for taxpayers whose home is the base of employment. If you fall under this category, you can claim a deduction from home to work and vice versa if you meet all of the following criteria. Your employer requires you to start work at home, and then you have to travel to another job site to continue your job. Working in two locations is necessary due to the nature of your job, and the trip to your regular place of work isn't a normal trip that would have occurred anyway. For example, take Abraham, who is a network engineer for a broadband internet company. He's on call 24/7 to fix internet outages. So his employer have set up a secure terminal so he can work from home in Carlton. But when there's an outage, he has to drive to Noble Park Data Storage Center to resolve the outage issue. So in this case, Abraham can claim a deduction for the work-related trips from home to Noble Park and Noble Park back home. Let's move on to the last category, which is category 4. For those who do itinerant work, as in shifting places of work from one location to another, such as Uber driver or plumber. If you work at multiple locations throughout a day, you can claim travel expenses if you incur for trips between places of work and home. And the following factors indicate that you are an itinerant worker. Travel is a fundamental part of your job, not merely because it's convenient for you or your employer. And your job requires you to work at multiple locations, and you don't have a regular or fixed place of work, and you regularly work at more than one job site before returning home. And you are often uncertain of the location of your work site. And if you're an employee, your job pays you a travel allowance because you need to travel continually between job sites. And you use this allowance to pay for your travel. Let's move on to the list of items that you strictly cannot claim. So if you have a regular place of work, you cannot claim between home to work and vice versa, even if you live far away and even if you work overtime. You cannot claim the running cost that it's under a salary sacrifice or novated lease arrangement. If you've been reimbursed by your employer for a car expense, you cannot claim that either because that's double dipping. You cannot claim driver's license or any special heavy machine driver's license either. You cannot claim parking, speeding fines, and any other fines and penalties. And lastly, you cannot claim the cost of the car outright. If you are qualified and you have kept a valid logbook, you can depreciate it over 8 years. That's the life of the car under the logbook method. Rule number 4 requires you to spend the money yourself and you weren't reimbursed by your employer. All that means is you can't claim a deduction if you've already been reimbursed. And last but not least is rule number 5, which the ATO requires proof of record or record keeping. Now, record keeping really depends on whether you choose to calculate your work-related car expense on the cents per kilometre method or the logbook method. Regardless which method you choose, you have to keep these records for 5 years from the date of tax lodgement. And if you are choosing the cents per kilometre method, you need to show that it's your car, how you calculated your work-related kilometre, which detail, date of each journey, purpose of the journey, and total kilometres driven for that journey. And you don't have to keep a logbook or receipts, okay? And if you choose to claim work-related car expense under the logbook method, the ATO requires proof of record that shows you created a logbook for 12 continuous weeks, which you could use it for 5 years. And during this logbook period, you must detail the date the logbook period begins and ends, the odometer reading at the start and end of the logbook period. And for each work-related journey, you must detail the date of the journey, the start and odometer readings for that journey, the destination and reason for that journey, and the total kilometers traveled for that journey. And you also need to show that it's your car. You need to keep receipts and other expenses record. And in each of the 4 following year 1, meaning subsequent years between year 1 and 5, you need to keep the start and end odometer readings and the work-related use percentage. And you also need to create a logbook once every 5 years because each logbook period only lasts for 5 years. This logbook will be used to calculate your work use percentage. Let's determine what's the best method for claiming work-related car expenses. So with the cents per kilometre method, It is the best option for you if you spend less than $85 on actual car expenses per week. Also, your car is not that new, it's relatively old, so there's no depreciation to claim. It's not under finance and you don't use it that much. The logbook method, on the other hand, will be the best option for those who have a relatively new car. The car is under finance and you use it a lot for work. You spent $85 or more per week. If you choose the logbook method, please do not keep a logbook during the Easter, Christmas, or holiday season. Do you know why? Because it will lower your work use percentage, which means smaller tax deduction. And later on, if you get a new car, you can continue to use the old car's logbook, provided that your job has not changed and your work use percentage have not changed. And what happens if you have 2 or more cars? Then you have to keep a logbook for each car separately and all for the same 12-week period. Let's move on to the exciting part, which is what's the calculation methods and how is it calculated? As mentioned before, there are 2 methods, the cents per kilometer or the logbook. So under the cents per kilometer method, you can claim up to 5,000 kilometers per car per financial year. For the 2024-25 financial year, the rate is 88 cents per kilometer. So it can change annually. And if you want to find out the prior or future year's rate, please refer to the link in the description box below. Please note that this method covers all car expenses, so you cannot claim individual actual expenses on top of this, such as petrol, oil, servicing, car wash, rego, insurance, and any of that, okay? Let's walk through an example. In the 2024-25 financial year, we've made 2 work-related trips per day. From the office to see a client, from the client to the bank, and the bank back to the office. This adds up to 22 kilometers for work-related trips per day. Because she drives 22 kilometers per day, 5 days a week, that gives her 110 kilometers per week. So over 50 weeks, that's 5,500 kilometers. But the cent per kilometer method only allows up to 5,000 kilometers. Therefore, Eve can claim the full 5,000 kilometers at 88 cents per kilometer, totaling $4,400. That gives her $4,400 in work-related car tax deductions. As an employee, Eve can claim this on her personal tax return under the deduction schedule item D1 work-related car expense. Now let's explore the logbook method and how it's calculated. If you kept a valid logbook, that logbook can be used to calculate your work use percentage. The work use percentage is the portion that you can claim on your actual car expenses such as petrol, oil, servicing, car wash, rego, insurance, interest on the car note, depreciation expense on the car, etc. This method, as you could see, is less simple than the cents per kilometer method, but it can give a larger deduction if your car is relatively new, it's under finance, and you use it a lot for work. Let's use a logbook example of Adam. Let's say Adam completed his 2024-25 logbook using the MyDeductions tool in the ATO app. He traveled a total of 2,100 kilometers. During the 12 weeks logbook period, 1,320 out of the 2,100 kilometers were for work-related use. To work out his work-related use percentage, Adam take 1,320 divided by 2,100 multiplied by 100%. That gives him 63% work-related use percentage. This means that Adam can claim 63% on his actual vehicle expenses. Now let's multiply Adam's 63% work use percentage by his actual vehicle expenses for the financial year. So we can see that Adam's actual car expenses for the year are $18,650. This includes all of the vehicle expenses listed in this Excel spreadsheet. Adam then multiplies his 63% work use percentage by the total car expenses of $18,650. So this gives Adam $11,750 as his work-related car tax deduction. Please bear in mind the total expenses includes depreciation on his car, but depreciation is outside of the scope of this video. So be sure to subscribe and click the notification bell for updates. Where do employees and businesses record work-related car expense on their tax return? Employees are to record work-related car expense in the deduction schedule, item D1 work-related car expense, whereas businesses recorded in the business schedule under item motor vehicle expenses. So how do you keep track of your work-related expenses record? You can easily keep track of your work-related car expenses in multiple ways. I recommend using the MyDeductions tool in the ATO app because it allows you to keep mileage, receipts, and other papers all in one place, and you can back it up in the cloud also. Alternatively, you can use a physical logbook, the Notes app on your phone, and an Excel spreadsheet. That's the end of this video, guys. If you found this video helpful, please give it a thumbs up and subscribe for more content like this.